here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, the Everest faces off against Sydney's iconic Opera House with cries of elitism and calls for a CEO sacking. We're talking Sydney horse racing, and it's sure getting racy. Our interview with the Everest founder and Racing New South Wales CEO, Peter Valadis. Australian investors to get direct access to Apple shares. We speak with Chi-X CEO Vic Jokovic. And an earthquake in bond markets today in the US. We'll go through why it's happening and what it means for markets with our markets panel, Michael McCarthy from CMC Markets and Adam Dawes from Shaw & Partners. Now, if ever there was a good example of all publicity is good publicity, it was surely today in the spat Racing New South Wales Chief Executive Peter Valandis is having with the Sydney Opera House. It made front page news and a blistering bulldozing interview on Alan Jones today. More of that in a minute. It's all about next Saturday, 13 October, the date of the richest horse race on turf in the world. 12 top draw horses in a 1,200-metre sprint, not in Melbourne, but at Sydney's Randwick Racecourse. It's called the Everest, and if you haven't heard of it by then, you'll have been hiding under a rock all next week. Promotion will be in overdrive. With $13 million in prize money, the Everest is not just the richest race, it's surely the most exciting development in racing since Jerry Harvey and Singo shook up Magic Millions. The man behind the Everest is Peter Valandis, CEO of Racing New South Wales. He spent many years in administration, starting with trotting, and is said to rank number 40 of the most influential people in Sydney. The Everest is cocksure, comes just 3 weeks before the race that stops the nation in Melbourne, an early snatch of punter pocket money. And they're none too pleased in Melbourne, I don't think. It is only the Everest's second year, but the traction it's achieved is sure raising eyebrows. It's no ordinary race. It's open to anyone here or overseas to buy one of the 12 slots in the race, each one priced at $600,000. Each slot owner can nominate any horse at all for the race. They don't have to own the horse. They can negotiate with the owners and share the prize money. You can bet there's a lot of horse trading going on at the moment. Well, last year, the inaugural race drew a record crowd at Randwick and record betting on a New South Wales race. This year, $100 million is expected in tourism dollars, and Sydney hotels are reportedly 95% full. The fisticuffs today were over the ever-inventive Peter Valandis' ambitions around promotion. He wants to see the Everest race draw up in lights on the sails of the iconic Sydney Opera House. Now, after some haggling, the Opera House CEO, Louise Herron, agreed to the colours of the jockeys, but not to the Everest brand, nor to any draw numbers go up on the sails. That'd be useless then, according to Peter Valandis, who labelled the Opera House management as elitist. A message screamed across the Telegraph's front page. Then it was Alan Jones's turn to weigh in behind Valandis and, of course, on behalf of all the good people in New South Wales, to monster Chief Executive Louise Herron, who had decided, perhaps inadvisedly, to dial into Jones on air with Peter Valandis. Have a listen.
What we won't do is put text or videos of horses running or horses' numbers or names or the Everest logo on the Opera House.
Why?
It's not a billboard.
Why?
Not a billboard.
Who said? Who said? You. Who the hell do you? Hang on, Louise. Who do you think you are? This is a national.
Do you want me to answer, or do you want to keep on sprouting at me?
No. Well, hang on. Out there, I tell you what. Out there, I'll tell you what they're saying. They're saying that you should go today. That's what they're saying. Ask the open line here and see the emails that are written to me. They say if this can't be approved, you should be sacked because you don't own the Opera House. To put colours alone means nothing.
I recommend listening to the whole 10 minutes because Louise Herron didn't actually get a lot of airtime. Look, she had reason to stand her ground. Their Sydney Opera House sales policy she has to abide by, such that I could find it, Section 3.7 states, no logo or corporate identity shall be permitted to be projected onto the sails. And unless for a specific artistic purpose in relation to the Sydney Opera House, text or slogans will not be permitted. Well, in short, the Opera House Trust doesn't want the sales to become a commercial billboard. The problem is that she's been overridden by the state government on other sporting occasions like the rugby. At the moment, though, there doesn't seem to be any such directive from the Premier's office to light up the Opera House with the race draw. Over to you, Miss Berejiklian. Well, for a little more on all this, I spoke with Racing New South Wales CEO Peter V'landys. Peter V'landys, great to talk. Now, I'll come to this morning's spat in a minute, but just tell me first, the Emirates itself, how did it start?
Look, the Everest came from an idea in the United States with a race called the Pegasus.
In Florida?
In Florida, yeah. And I loved the concept because I believed it would generate significant publicity, and we needed to innovate racing in Australia. We needed to bring a new event which the younger generation could engage in. What we've discovered with the younger generation is they don't engage with things their parents do. So when their parents went on Facebook, the kids went on to Instagram and Snapchat and a few other social media sites. When parents started buying Apple iPhones, Apple had to do a marketing campaign to get the kids back because they didn't want to have the same thing as their parents. And it's the same thing with racing. Unless we bring a race that they can own and engage, it's great to have the traditional races, but they can't relate to them.
So what's different about this race?
Well, this race is big, it's brash, and it's Sydney. That's how we're marketing it. It's got a lot of intricacies because the people that actually fund the race are 12 slot owners, and they put $600,000 in, and then they need to go and find a horse to do a deal with the owners, and then they share the prize money, and the prize money is $13 million. Now, last year was great because it's really a race for the battlers when you look at it, because one of the slot owners is a Chinese billionaire. He went and did a deal with 20 Western Sydney battlers. The horse that won was owned by 20 battlers, mum and dad. One's a policeman, one's an electrician, one's a bricklayer, and so they were competing for $13 million, with one with a Chinese billionaire and one with a group of investors. And what we've tried to do is make the slot owners the personalities of the race, because they've got to pick the horse. And what that's done is caused controversy, because when somebody picks a horse, it might not necessarily be the one that you think they should have picked, and it's, you know, and it just generates publicity, and that's what attracted me to it in the first place. But the best thing about it, it got what we were aiming, and that is to get the under-35s, because at Randwick on the day of the Everest, they didn't have a cash bars in the public areas. What they did is it was pay wave, so you had to use your credit card and you bought your drinks. The beauty of that is you get a lot of information as to who your customers are, what their ages are, where they live.
And they were young.
And they were all under, well, 74% of the people that used the public bars were under 35.
And they were spending? And
they were spending.
Right.
And 61% had never used their credit card at Randwick before.
And what does Melbourne think about this? I mean, you're running this race just 3 weeks before their big week of festivities.
Well, look, they've monopolised the best time of the year to race. Now, what we've discovered out of the Everest, in its very first year, it became the second biggest TAB wagering product.
They must be a bit ticked off there down in Victoria, are they?
Well, they are, but look, I always say competition breeds excellence. You know, if you don't have competition, you become complacent and become irrelevant in the end. So it's nice to give Melbourne a bit of run for their money, and they're certainly feeling it, and they're feeling the pressure, because the Everest has been a juggernaut. You know, as I said, it's probably received more publicity than any racing event this year. The Melbourne Cup does get a lot of publicity in the last couple of weeks, but this is 12 months worth of publicity.
All right, now this fisticuffs that you're having at the moment with the Sydney Opera House, it actually started because you wanted to advertise on the bridge, on the Harbour Bridge, didn't you? Well,
we didn't want to advertise. What we wanted to do, we believe that we've got one of the best cities in the world, but it's starved of events. The last big event in Sydney was the Olympic Games. Here we are, we've built this event with our money, and we want to showcase it. And we want to showcase it around the world, because the beauty about racing is it's worldwide.
And you've got international horses running.
And we've got international horses running. It's big in England, it's big in America, it's big in Asia.
So what did you want to do with the bridge?
So what we wanted to do, without inconveniencing a motorist, so we weren't shutting the bridge or doing anything like that, but under the bridge there's these cradles, so we were going to hang some flags of the horses' colours, and then when the barrier was drawn, it would come over the top of the colours. So you'd have this beautiful bridge with all these colours across that you could take a photograph.
Now, that was resisted. Why?
We don't know, because we negotiated with them for over 12 months to get this to, you know, and we dealt with 4 government departments, and then right at the last minute, the bureaucrats said no.
So what did they then suggest?
So then the government came back and suggested the Opera House and doing a light show on the Opera House. So we spent a lot of money designing up a proposal,
yes,
and that was declined. Yeah. We've compromised significantly on the proposal on a number of occasions, still declined.
Now, Peter, there was a spectacular Barney on Alan Jones today between you and Alan Jones and Louise Heron, the CEO of the Sydney Opera House, who Alan Jones, I think, hardly really let her have a word in edgeways. But anyway, look, one thing, just looking at the Sydney Opera House, the Trust's policy in this area, and 3.7, it actually says no logo or corporate identity shall be permitted to be projected into the sales. Colour shall not be used to promote a corporate identity, and unless for specific artistic purpose in relation to the Sydney Opera House, text or slogans will not be permitted. So, I mean, she was really arguing that, you know, no text is really arguing within the charter. I mean, that's what she had to do, isn't it? That's
her own charter, but in any charter you've got to be consistent. She's used it on a number of occasions for other sporting events, including the Ashes, including the rugby union.
But as she said, she was directed to do that, presumably by the state government.
She wasn't directed when she used it for Samsung. You know, Samsung became a sponsor of the Opera House, a commercial operation, and it was used.
But then that's in connection with the Opera House, so she gets it that way.
You've got to remember the Opera House is funded by the New South Wales taxpayer. If they want to fund themselves, pay commercial rent for the arts, and I don't think they could afford it, because on a business case you have to remember that the Opera House was built by the Opera House lottery.
Yes.
So it was New South Wales lottery, it was a gambling...
But Peter, it sounds what needs to happen now is that the Premier actually needs to step in.
Well, she's the elected representative. Look, if she said no, that's fine with us. But we want to be told by the government. Does the government in New South Wales want to support events or don't they? Or it goes a little bit deeper than that, because for me, doing business in New South Wales is it's run by bureaucrats. You don't get past the bureaucrats 90% of the time. And when we highlighted this, I was inundated with business people throughout New South Wales that suffered the same fate. They never get to a minister, they never get to an elected representative. All they do is get to the bureaucrat who's faceless, unelected, and no deal's done. So how do you do business in New South Wales?
Right, well, let's see what the Premier actually does end up saying. But great publicity for you, surely, in terms of all publicity being good publicity. Can I just come back to one of the comments about the Opera House, is that it's being elitist in its position at the moment. There are people out there who believe, you know, what, notwithstanding your 20 battlers on the China slotters side, that actually this race is quite elitist because of the amount of money involved and because of it all pouring into Sydney.
Yeah, but you've got to remember that it's an event. And as I mentioned before, Sydney's starved of events. Why does New South Wales consume the Melbourne Cup? Why do we stop for... Why doesn't New South Wales have its own event? We've funded this event. All we've asked for is to promote the landmarks of Sydney. We haven't asked for any money.
What about racing itself? I mean, $600,000 is a lot of money for a slot.
Yeah, but you've got to remember that the slot owner puts the money in and the battler wins it. So there's nothing wrong with that.
And those commercial deals done between the slot owners and others presumably are done on pretty tough terms.
Not really. I think you'll find that the slot owners, the owners of the horses, especially the good ones, do a better deal than you think they do. So look, and that's the intrigue of the race.
Yeah.
But you've got to remember, it's an event. Why do we have the Australian Tennis Open? Why do we have the Melbourne Cup? Why do we have the Grand Prix? They're all events. And you name the last event in Sydney. I mean, the Olympic Games comes to mind, and the Invictus Games next week. But what else is there? I mean, I can't remember being excited in Sydney to go to an event. Of course, there's the NRL Grand Final, which I get very excited to go to, but that's a local event.
Yeah. Peter, you've been renowned as an innovator here, and tough but highly respected. You took the corporate bookmaker on in New South Wales and won, which is more than they did in Victoria. Look, I'm just wondering, when it comes to that Pegasus race, for example, in Florida, it started well, it sort of has faded. How are you going to make sure that Emirates continues to pump?
Well, we've done it completely different to what they have. And just on the corporate bookmaker one, let me just say this, that we did a service not only for the racing industry, but for all sport, because wagering operators were profiting off the back of sports. That's generated $260 million each year for sport. So because the corporate bookmakers on the way, they didn't want to pay anything. So we went all the way to the High Court with that one, and that's probably not only good for racing but good for sport that funds grassroots sport, because that money that comes in from these wagering operators.
And then there was your deal with the TAB recently.
The race is funded by the slot owners, and they've already committed themselves to 2020, and we keep putting. So all the money we generate from the race, we put back into the race. So the race this year is worth 13 million. Next year it's worth 14 million. In 2020 it's worth 15 million. And what we've done, which is different, is that we've picked the horses that we're best at in Australia. We're best at horses that run over 1,200 metres. That's what we're good at. When we went to Ascot and we won with Black Caviar, Takeover Target, Shazor, Miss Andretti, all sprinters. We've never taken a horse that's a stayer, which is the Melbourne Cup distance, and won a race in Europe. We've never done it. We've done it, so what we're good at is sprinters. So we know we've got the best in the world in Australia. We don't have to get 23 horses from England that are stayers, because we've got our local products. So they've got to come to us now, the good horses around the world. That's why it'll survive. And I think promotion. And as I said, we've made this race disruptive. We've made this race appealing to the younger generation. And look, today it's disruptive. It's front page of 3 different newspapers. So, and it's been front page for quite a while, and it'll continue to be front page, because that's the whole marketing campaign. It's disruptive. Last year in the Australian, we put an ad in during Melbourne Cup Day that Australia's richest race hasn't been run today. It's on in Randwick in October next year. Well, naturally the Melbourne people got upset about it, but they have to appreciate that's not having a personal go at them. The event is disruptive. It's designed that way. It's designed to get that younger generation that's a bit rebellious and a bit wants to be engaged in their own event.
Yes.
And that's what we're doing here as well. We're trying different things, doing barrier draws on opera houses and Sydney Harbour bridges, is because the event is disruptive.
Peter V'landys, a very disruptive day, but as I say, all publicity. Thank you very much.
My pleasure.
Well, after the break, direct access to Apple shares for local investors. Chi-X CEO Vic Jokovic next.
You're watching Ticky on Your Money. Now, back to Ticky.
An alternative to the ASX, Chi-X is a new trading platform that gives Australian investors access to global stocks. The platform yesterday announced that investors will have access to Apple stocks and as many as 30 US companies by mid-2019. For more on how the platform works and what it could mean for your portfolio, senior business reporter Leah Shanahan spoke with Chi-X CEO Vic Jokovic earlier.
It's a simple product because the tracer actually mirrors a US security. So a US stock is held on trust by Deutsche Bank, the global custodian, and the tracer mirrors the performance of that stock. So you get a beneficial ownership, and the underlying tracer will trade as the underlying share does.
Sure. And what's the need for this in the market, do you think? Is there a demand for it, do you think?
There's absolutely a demand, and you know, the journey started about 3 years ago. I was actually at Deutsche Bank at the time and involved in the early days of working with the Chi-X team, with the regulator, etc. The need we found from the client base was that it's difficult to buy international shares directly. It's inefficient. You need to open up a US account. You need to have a US custodial account.
Yeah.
You would need to trade obviously overnight. I mean, you can place your order over the day, but if you want to see a live market, you're trading through our evening. The costs can be large in terms of, in particular, the FX charges. So it was about efficiency, bringing efficiency to that, to the global offering. And clearly we started with US names because, you know, having done some research at the time, I think the largest proportion of offshore stocks that are held by SMSFs and Australian shareholders are actually US names.
Yeah, I'll get to that in a second. So it is a security, it's not a derivative kind of product.
It's absolutely an Australian security.
Yeah, okay. And I'm interested, where else does this exist? Does this exist in any other form in Australia so far? Or is this the first time?
So it's completely unique. So it's been a long road. Given its uniqueness, it was a long road getting the product actually to market. So the first tracer went live yesterday in Apple, yet the process of getting apples approved and to market took about 2.5 years.
Now, you've touched on this already. Why wouldn't you just say, well, I'll just trade in US stocks on a US platform?
Yeah, absolutely. And that is available. There are a number of banks that offer direct investment into US shares and global shares. The issue is the amount of time that it takes to set up an offshore account can be 3 to 8 weeks or longer. You need a US custody account in order to convert the FX or do the FX trades, or that could be done by the bank, but it's complex. Your stock won't be held on a local HIN, therefore you don't have that security. As I said, you'd be trading overnight, and I think perhaps the most inefficient aspect of investing globally, and I found it myself when buying offshore shares, was the FX charges that can be levied. So, the brokerage charges, whether charged here by your local broker or an offshore broker, you're going to be charged some sort of commission rate. We would argue that it's probably cheaper to execute them locally than through a global bank or global broker. But the FX charge is that hidden charge where you could be charged anywhere between 100, 120 basis points, 1.2% on each side of a trade when buying shares directly. So think about that. That's a loss of potentially 2% on your investment round turn in buying them directly, whereas the FX charge on the tracers will be levied by Deutsche Bank, the global custodian and issuer, at 0.2 or thereabouts basis points per side. So you're talking about 0.4 basis points. So, in percentage terms, round turn 0.04% as opposed to 2%.
So I was going to get to that. How did Deutsche and your exchange make money out of this then?
Okay, so the charges are actually quite light. The way that Deutsche Bank makes their money on the tracers is essentially by levying a service fee, and that service fee is levied on the dividends. So it's levied at 10 basis points per dividend that's paid. So if you look at that on a yearly basis, if there are 4 dividends, that would be 40 basis points. If there's 2 dividends, it'll be levied at 20 basis points per dividend, either quarterly, half yearly, or full year, depends. But it's 10 basis points per dividend. That's what they levy. We, in turn, are paid by the issuer, so not by the end client. So the issuer will pay us a service fee, if you like, as well, or an issuer fee. So to the client themselves, they will be levied the commission that their broker charges them on their normal Australian investment or share account, and they'll be charged that dividend service fee, if you like, at 10 basis points.
Okay, so
that's it. And then the wholesale FX rate.
Sure. And let's talk about the choice of Apple as the first stock. It's obviously very limited so far, the tracer product. It's got this one stock. Why Apple now? And then what else can we look to? What other stocks do you think we'll be seeing in the near future? So
Apple's was the obvious choice. It's the largest. What's the largest name globally? Largest corporate name globally listed. It's currently there or thereabouts a $1 trillion company. So it was an obvious starting point. It was obvious starting point because we did some research, over the course of the last couple of years as to what SMSFs and non-SMSFs Australian investors hold directly, and we found that Apple was there or thereabouts one of the top 2 or 3 names that Australian shareholders hold. So, and added to that, it's a tech name, and we talk about efficiency, and we talk about something that we felt would add to what's on offer for Australian investors. There's currently a lack of diversification in most portfolios. I think everyone realises that. We've got an index here that's heavily concentrated across banks and financials, materials, and REITs make up about 60% of the local market. Tech makes up about 2%. Apple's a large tech stock, so it makes sense in terms of diversification.
And other tech stocks will be the focus of the other traces?
Look, you asked about what's coming next. We hope to have another 4 names offered next Thursday. So we hope to have 5 by next Thursday. We think somewhere around 10 by month end. Large US names, S&P 500 names. And we haven't finalised those names, but suspect that there will be somewhere around about 4 or 5 tech names offered initially.
After the break, diving deep into AMP and other financials with Morningstar analyst Shanaka Gunasekara.
This is Ticky on Your Money, covering the big business stories.
Yes, welcome back. Well, one business that has taken a battering as a result of the Royal Commission, of course, is AMP. Investors are looking on and wondering about a range of scenarios. Can Chair David Murray turn the business around with his new CEO? Or at the other extreme, will the recommendations from the Royal Commission in February blow a hole in its business model? Well, joining me for more is Morningstar's Shanaka Gunasekara. Shanaka, great to have you on board.
Hi.
Now, you know AMP inside out. And should we be, if you're an investor, should you be looking at this with any degree of positivity?
Well, I think as long as the Royal Commission is going on, I think there's going to be some risks involved. Now, the interim report was issued last week, I think on Friday. And unfortunately, they didn't provide any sort of interim recommendations. They posed a lot of questions, and some of those questions hinted at systemic issues. They suggested that the issues weren't, or the financial advice scandals weren't as a result of a few bad apples. They were more system-wide. So there could be some system-wide changes, issues like vertical integration that will impact.
So we're hearing that when it comes to, say, the big banks, the vertical integration, a lot of the banks are ahead of the game because they've actually begun to unwind their holdings in wealth or insurance. For AMP, though, its vertical integration is fundamental to its business model, isn't it? Because
That's correct.
Just explain how they're set up.
Sure. Well, they have about just a little under 3,000 financial advisors. They've got the biggest financial advisor network in Australia by a long way. And those are primarily aligned financial advisors. They have a few salaried advisors as well. So things like grandfather commissions impact them significantly. And so they use those financial advisors to funnel funds into their manufactured products and their platforms. Yes, right. Superannuation products, also their investment products and their AMP Capital, and also some banking products as well. So
just taking each one of those, what if they say, let's end grandfathered commissions, in a relatively short period of time? How will that hit AMP? Well,
my reading of the interim report suggests that that's likely to happen.
Yeah.
So look, there's a couple of things that's going to affect AMP because the commission's got primarily to the financial advisor.
Yes.
Now you take that along with the educational standards as well.
Yes.
So that's going to likely prompt a lot of advisors to leave AMP and also the industry. Also, those grandfather commissions are sort of linked to those higher paying legacy products. And so when you switch from the higher paying legacy products to the cheaper ones, that's going to impact their gross margins.
And also you've got these questions, as you say, the interim report was a series of questions, but some of these questions quite loud and clear are things like, should the manufacturer of the product also be the seller of the product?
Correct.
Now if that is unwound, surely AMP, as we know it, can't function, can it?
Yes, well, it's a backbone of their business, the vertical integration, using those financial advice.
And platforms.
Exactly.
Because the platform fees that they get, presumably, are really important to the
Sure,
business.
yeah. Those platform fees are coming down. And I think they're going to be... platforms are more like a commodity now, I think.
We've got a lot of disruptors.
Yeah, like, Net Wealth and OneView and all those other ones that are out there. And so it's becoming more like a commoditised product. So I think those fees are going to come down. And BT actually reduced their fees, and they're fighting pretty aggressively now.
Right.
With those platform fees. So, So
if you were Mr. De Ferrari, what would you be doing? The new chief executive, he's parachuted in from, David Murray's got him down from Asia, from Credit Suisse. What can he do?
Well, I guess you're going to have to do an audit system-wide, because I think there's system-wide issues. Their systems clearly aren't working properly, you know, charging fees for no service, that sort of thing, and not advising ASIC quickly enough, breach notices, those things.
Yes.
So you're going to have to audit the systems, and I suspect there's going to be more investment in systems and processes. And I think, irrespective of what he wants to do, I think that's what the interim report will require them to do.
Do you think this increased regulatory cost is priced into AMP now?
Well, they've already noted that there's going to be a significant amount of regulatory costs. I think they suggested, I think it was 50 million over the next 3 years, each year over the next 3 years. I think it's potential to be higher than that. I've sort of, in my modelling, it's very hard to determine at this stage, because we're right at, I think, at an inflection point.
Yeah.
And so I suspect there will be more, but it's hard to determine exactly how much more. You'll have to wait till the final report, and also
well, for investors, that's another 6 months. I mean, if you're thinking,
yeah.
what am I going to do here? Do I sell out? Do I stay in? Do I?
Well, yeah. If they break up the vertical integrated, I think there could be another leg down.
Yes.
If they keep it and the systems changes aren't that significant, then you might be, you know, the price could go up, but I suspect also for the next couple of years there's going to be a lot more court action against them, you know, class actions as well, of course, court action taken by ASIC. So there's going to be a lot more headwinds still.
But who's going to pick up the slack of this business? And why should we trust them anymore?
That's true. I mean, it wasn't just the vertically integrated models. You got people like Dover, Henderson, Maxwell.
Yes.
And the thing was, with these independent financial advisors, the question, if they do engage in misconduct, are they going to get the funds to pay, you know, repay their clients, which is, I think, is also an issue.
Because they don't have such deep pockets.
That's right, exactly. So, yeah, there are issues, and I think that sort of unintended consequences of breaking up the vertical and integrated model. I know it's not very popular at the moment, but there are, I think, unintended consequences.
Right, OK. Now, look, of course, the other stock that you cover very closely, IOOF, how are they being impacted by the Royal Commission? How do you see them as an investment now? Well,
likewise to AMP, their model is based on the vertically integrated model as well. They've got this, once they take over the ANZ wealth management business, they'll probably be the second largest by advisor number. They'll have a little under, I think, about 1,700 advisors.
Yes, because they're going the other way. ANZ is shedding.
And they're buying.
And they're buying.
Yeah, so they're doubling down on vertical integration. So, yeah, so it's, you know, if they get rid of vertical integration, that's obviously a high risk for them. Yeah. But if they don't, the ANZ acquisition will probably result in high earnings per share, probably from about 2020 to 2021. And so it's probably, they haven't had the same amount of fallout as AMP from the Royal Commission. I mean, the AMP has really got probably been hampered the most of all the organisations. So, so if you want to take a bit of risk, they're probably better bet than AMP, I think.
You do think so?
Yeah, because they've got the catalyst of the ANZ acquisition if they don't get rid of vertical integration.
Yeah. More broadly, their basic business, how is it going?
Well, I mean, they've done pretty well. I mean, the last financial results was pretty strong.
Yes.
Now, both AMP and IOOF are facing gross margin compression because people are moving out of these expensive legacy products into more contemporary platforms. So they're all facing gross margin compression, but their operating costs they've shown a lot of discipline in controlling operating costs. So they've kept net margins pretty stable, and so the results were pretty strong. But our concern is moving forward because the Royal Commission will require them to invest more in systems, in processes, so I reckon your operating costs will probably go up, so it'll be harder to maintain.
And hopping back to AMP for a moment, what about the flows of funds?
Yeah, well, I mean, the last half they lost, I think, about 870 million compared to the previous.
But that's a confidence thing, isn't it? Or
Absolutely.
is it? I mean, or are we just going to see this wave continue towards industry funds?
Well, this was before the industry fund issue. So this was in May and June after they appeared at the Royal Commission in April. So they said that they lost a lot of outflows in May in particular, and the outflows fell a little bit, was still at elevated levels.
But you think it's sort of
well, I don't know. It's very hard to say. It's
Yeah.
very hard to extrapolate after 2 months. And then subsequent to that, then you have the superannuation hearings. And then after that, more flows from retail funds into industry funds. So I suspect this half is not going to be very good either. So,
right.
Yeah.
So we wait and see for the next 6 months for AMP.
Yeah.
Shanaka Gunasekaran, thank you very much.
My pleasure.
Okay, well, moving to markets now more broadly. ASX closing up 0.15% today, but down 0.3% for the week. Today's big news, Wesfarmers has spun off Coles shares to debut on the ASX on November 21. I got the lowdown on that, plus the wrap-up of markets this week with my panellists Michael McCarthy from CMC Markets and Adam Dawes from Shaw & Partners. Gentlemen, happy Friday. Well, we've got some quite big corporate news. Perhaps I can start with Adam.
Yes.
Now, Wesfarmers, the trading halt.
Yes.
Today, they've come out of it. What's happening with Coles?
So it looks like that the demerger now has been ratified, and in other words, it's a go. They're looking then to now be a 1-for-1. So Coles 1 share, Wesfarmers 1 share. Looking for an earnings around sort of a PE ratio of 15 to 16 times, which will probably price Coles around $14 to $15. So it's going to be.
Do we think that's fair?
Well, it's about a 20% discount to Woolworths shares,
right,
and it will bring it into the ASX top 30. So it will be certainly a powerhouse inside of that.
What do you think of that?
I really like the structure of this deal. It's cost efficient. There's no underwriting involved. There's no funds raising involved. I'm no surprise the court gave this a tick. I'm pretty sure shareholders will in the middle of November as well.
Yes.
Just goes to show they know what they're doing. What I like even more, though, is it cleans up the balance sheet, gives them $2 billion hanging around. They've organised facilities for another $4 billion.
This is which company
we're talking about? Sorry, this is Wesfarmers.
Yeah.
And given their proven ability to build businesses or turn them around at least, this will have the traders talking for weeks
going back to
what they'll buy.
Going back to Coles, Adam, for a minute.
Yeah.
What about they've got another announcement talking about efficiencies?
Well, they have sort of talked about efficiencies. They're looking to close another 5 distribution centres and turn that into artificial intelligence or AI, and looking to make that automated.
So what's that mean for jobs, though?
Well, it means jobs will be cut, and it also means that...
that's over 5 years?
5 years, and they're looking to catch up with Woolworths, and Woolworths has been the leader in the spend for that artificial or that automation, and now Coles will have to play a bit of catch-up.
And they're not really saying where these distribution centres are yet, are they?
No, they didn't give any indication of where that would be, but there was talk of Queensland and New South Wales being the major areas.
But this overall, you think, Michael, win-win for both companies?
Absolutely. Coles Amazon tie-up, there's an interesting thought. They've got the distribution channel, Amazon have got the digital reach, and we know that the Coles Group are interested in it. So
you heard it here first.
There's talk of Walmart as well.
There we go.
And Walmart.
Yeah.
Right, well, that's very... Now, there was a closure of a company in the world which had good news on the aluminium front. Michael, this what's it called? Alunorte, which was Norsk Hydro's Brazilian refinery.
Now, this appears to relate to some woes with, first of all, an environmental issue that the company created itself. Yes, exactly, and a spill. But now the local courts are all getting involved and all having their say. And they've got to the point where they're now micromanaging the Alunorte operations. Obviously unfeasible. So the plant's been shut. Now, the initial reaction in the aluminium markets was a surge, up 11% in the session, another 4% in after-hours trading for the LME aluminium contract. That's a big move in any base metal. And, of course, we saw a response locally. Alumina Limited up 10% in response. We saw South 32, the formerly unwanted, up 7% in trading in response. So quite a big deal, but it has edged off a little because it's now being seen in the context of an ongoing negotiation. Really, this is a way to put some pressure back on the Brazilian authorities to point out if they make operating too difficult, jobs will be lost and so will income for the country. So markets now taking a view it might not be as long-lived as we thought.
OK, all right, well, that's corporates. Let's go to currencies. The Australian dollar. Yeah.
2.5-year lows at the moment.
No, we don't want to be going abroad and spending money at the moment, do we?
Well, I just came back. You just came back. So, no, certainly 2.5-year lows. Look, this is good for Australia. This is good for tourism in Australia. This is certainly great for a lot of companies. You know, the Sydney airports of the world, so seeing more and more tourists come in. It's good for our GDP. I mean, it is good for us to see this lower Aussie dollar.
But why is this happening? It's the US.
US dollar is going to new highs and continuing to new highs. More and more buying in the US, hence they're selling safer currencies like Australia, buying the US dollar because that's where obviously the alpha is or that uptick is. But certainly, our Aussie dollar really suffering in amongst all
Now,
of that.
Michael, bond markets. There's been a lot going on, though. Just explain to us.
The equivalent of an earthquake.
Really?
The bond yields on 10 and 30-year bonds in the US are climbing. That means the yield curve's steepening, and it means everything's getting more expensive. This is the price of money, and the price of money's going up, and that has implications all around the globe. And what's so important about what happened this week is they broke to new 7-year lows in terms of bond prices or 7-year highs in terms of interest rates.
Now, what has kicked that? Is that the Fed, or is that what's kicked it up?
The Fed certainly had a lot to do with it, and in particular comments from Fed Chair Jerome Powell around the idea that the interest rates in the US were a long way from neutral. It's been a big, really interesting discussion amongst central bankers about what the neutral rate for interest rates in the US is. We'd all lowered our expectations as a market. Jerome Powell seemed to kick them higher again, and Giselle said that there was plenty more room to lift US rates, and that's what really
because
started
the earlier
this off.
indication was the reverse of that, actually, that the neutral was sort of...
We weren't too far away, and that there was a new neutral. It was lower than we previously thought.
Right, OK. So how does that translate for our banks and wholesale funding and all that sort of stuff?
Well, it adds cost to every corporate bottom line. That's the reality of it. Certainly our banks are likely to be affected, but it also changes valuations in the valuation models that analysts run. So people will be bringing their valuations down. It could even crimp growth expectations. And, of course, if that starts feeding into valuations as well, we could see a severe effect in a market in the US that is still near its all-time highs, still trading on 17 to 18 times earnings, and still with a paltry dividend yield.
So you're saying it's looking toppy from that point of view.
And a 10 to 15% pullback in US shares is not out of the question.
All right. The other issue that's been going around, I saw it in the papers, maybe $2 petrol in Australia. So what's going on with the oil price, Adam?
Oil price starting to move higher at 85 at the moment. There is talk of $100 US. It's probably not out of the question. We're seeing US-Iran oil sanctions, and certainly, you know, it's supply and demand, but it's also companies that have been basically care and maintenance for a lot of these things, not putting any new oil fields on.
Are we breaking into a new cycle, do you think? Or
I think here we go again, It could very well be that cycle. And really, at the end of the day, oil prices, if it does get up there, $2 oil prices here, $2 petrol prices here in Australia, but that means Woodside would see at $40. You know, that is pretty good for Santos. That's pretty good for some of our oil companies, but not great news at the Bowser.
Right. OK, very busy week, I think. But Adam Dawes, Michael McCarthy, thank you very much.
Thank you.
Well, let's catch up with some political news of the day now. And the Prime Minister is facing a GST standoff with the states and territories who are demanding a guarantee that they won't be worse off. Mr Morrison was also on the defensive this week when it came to the Banking Royal Commission, while Labor seized the opportunity to unveil its new preschool policy. This is The Week in Politics.
Kicking off the week, the Prime Minister in the West and promising to legislate his GST fix.
I mean, a deal does not get better than this.
But state and territory treasurers had other ideas when they met in Melbourne, demanding a guarantee that no state would be worse off.
We want the Commonwealth Government to come to the party. A guarantee would provide us with that certainty.
The Prime Minister wants to ram the legislation through Parliament.
Bill, you got 2 weeks. Show up, vote for the bill.
Well, let's see the legislation.
There was greater consensus when it came to removing the GST from tampons.
This is a long overdue reform.
The fallout from the Banking Royal Commission continued.
How come no one from the banks has gone to jail?
With Labor calling for the Commissioner to be given extra time, while holding roundtables to hear from people it says the Commission has ignored.
And to suggest that they have been ignoring the submissions that have been provided to the Royal Commission, I think is offensive.
While the Prime Minister was on the defensive when it came to banks, the opposition leader was on the policy offensive this week, promising to extend preschool for 3-year-olds.
Some of the smartest countries in the world are doing it. Australia's fallen behind.
The government critical of the $1.75 billion price tag, arguing Labor's numbers don't add up.
They actually don't seem to have funded anything for 3-year-olds at all.
We've had this thoroughly costed by the PBO.
But for another week, The View from New York was in the spotlight.
These people, what are they sort of like miserable ghosts.
The former PM caught on tape attacking Tony Abbott and Kevin Rudd. As for the current PM...
I'll leave all the ghosts in the past, I think. That's where ghosts best remain.
Trudy McIntosh, Sky News, Canberra.
Well, after the break, we'll catch up on all the international news, including a spike in the polls for US President Donald Trump.
Now, back to Ticky.
Moving to international news now, and he's an extraordinary leader. Political strategists claim the saga over Donald Trump's Supreme Court nominee and sexual assault allegations have actually boosted support for the president's party. They claim the Republicans' party is now more united and more of a threat to the Democrats in next month's midterm elections.
The hugely divisive battle over Brett Kavanaugh's nomination appears to be having an effect that neither Democrats nor Republicans could have predicted a month ago. It is unifying Republican never-Trumpers with the president's most hardcore GOP supporters.
Whether you're a Trump Republican, a Bush Republican, a McCain Republican, a libertarian, or a vegetarian, you're pissed. I've never seen the Republican Party so unified as I do right now. The defining issue in 2018 has changed.
Money and polls bear that out. In the last week of September, the National Republican Congressional Committee saw small donations jump 175%. Total money raised up 194%, while polling shows a GOP enthusiasm bounce, and not just in North Dakota. Compared to early September, the number of Republicans feeling extremely interested in the election climbed 2 points in Arizona, that's within the margin of error, and 9 points in Indiana, 8 points in Missouri, and 11 points in Tennessee, according to Wednesday's Fox News poll.
Republican men would be energized by the whole Kavanaugh issue, but it turns out Republican women are as well. In fact, they're more energized by it than are Democratic women.
Still, an October 2nd Quinnipiac poll finds that by a 50 to 43% margin, voters want Democrats to control the U.S. Senate. There is a hitch to that. Only 1/3 of the Senate is up for re-election, and the typical midterm bounce for the opposition party may not be in play.
Fewer Republican seats up, more Democratic seats up, and more Democratic seats up in red territory than the average midterm election by far. In fact, this is the most favorable landscape for the party in power since we began electing senators on a popular vote basis in 1914.
But Kavanaugh confirmation anger works both ways. Democrats are confident they have their own midterm rallying cry, the testimony of Dr. Ford and the president's condemnation of it.
Donald Trump is disgusting, and she has a right to be treated with respect.
Given the unexpected twists and turns of the last month, it is almost certain there will be more of them in the next month. If Kavanaugh is confirmed, Republican voters may lower their guard in victory as Democrats rage in defeat. Buckle your seatbelts.
Well, we've heard in the last 24 hours that Russia has attracted scorn and punishments from both Australia and other Western nations for its cyber warfare. Well, the US Vice President has now called out China. Mike Pence claims China is a much greater threat. He says Chinese agents have been targeting the US military and private companies, as well as attempting to influence next month's midterm elections.
The United States Navy will continue to fly, sail, and operate wherever international law allows and our national interests demand. We will not be intimidated, and we will not stand down.
The message was unmistakably clear. The United States may not see China as an outright enemy, but they're most certainly not the U.S.'s friends.
To put it bluntly, President Trump's leadership is working, and China wants a different American president.
In an address meant to build off President Trump's speech at the United Nations last week, Vice President Mike Pence today accused China of hostile activities, including meddling in the upcoming 2018 midterm elections.
What the Russians are doing pales in comparison to what China is doing across this country. And the American people deserve to know it.
That echoed a charge made by the president on Twitter last week when he noted that China placed, quote, propaganda ads in the Des Moines Register and other papers made to look like news.
China! They're draining us, they're taking our money, they're rebuilding themselves.
Whether the ads constitute election meddling is open to interpretation, but what's clear is the Trump administration is engaging in a coordinated strategic counterattack on Beijing, including massive tariffs on Chinese-made goods and financial penalties for unfair trade practices, new laws limiting Chinese import dumping, including substandard steel, and targeted legal strategies meant to punish Chinese intellectual property theft. Pence warned major U.S. technology companies to remain vigilant in combating Chinese cyber infiltration amid reports that Amazon and Apple network servers may have been compromised by Chinese spy microchips, and renewed warnings about Chinese hacking groups targeting U.S. interests, as well as increased tensions in the South China Sea. For its part, Beijing, which continues to work very carefully with Washington on a number of important issues, most notably North Korea, has yet to officially make a comment on the Vice President's remarks.
And that's all for the show tonight. Have a great weekend. Thanks for your company.